Good morning, Paul Georgie from Allendale. It's May 19th, 2010. Well, the outside markets are going to have its influence again today. We came in here early this morning. We had the dollar was stronger. Now we're down 55 in the dollar. Crude is currently unchanged. Those two markets are extremely overbought in the dollar, oversold in the crude. Another thing that's going on is the crude oil the June contract goes off the board tomorrow, Thursday, so another thing you need to be watching for. And then we switch to the July contract as the lead contract, which is several dollars higher than the June contract currently. The euro currency and the concern over what's going on in Europe, the confidence of the investors is causing liquidation. Wouldn't be surprised to see some evening up of positions there, some short covering in some of these commodity markets because of just extreme oversold conditions. The gold, however, that is down about $6 to $7 here this morning. In the corn market, we got good news again from China. It seems like out of the last 6 weeks, 5 of them, China has come out with some kind of an announcement on Wednesday morning that they've purchased more corn. Well, they did the same thing today. 2 more cargoes of corn going to China, total of 500,000 metric tons now totally. And it looks like there's other end users and importing firms in China that are applying for permits to import corn. The corn that was sold yesterday to China from the U.S. was around $230 to $235 per ton. Feed millers in China buying corn out of the China reserve, the government reserve, paid $255 a ton yesterday. So there is definitely an advantage coming to the U.S. to get corn, and especially when the corn is in the northern part of China, they need it in the south. So would expect continued purchases here when the Chinese government allows those permits to occur. In the corn market, technically, we've got support at the 351, 1.5 area. Resistance up around the 370 is the big range that we're trading in currently. The soybean market, there's rumors floating around there, talk that China may switch some of their purchases from South America back to the U.S. Because of delay in shipping and moving of the soybeans. So that has been providing some support, but there's no foundation to that rumor as of yet anyway. Technically, the soybeans have sold off right down against some major support here at 930 area in the nearby July. There should be good support between 930 and 920. And the upside resistance right now is at 950, and then again at the 970 area. Wheat market, talk of a price war possible in the Mediterranean region between France and Russia. That certainly is not going to be good for the U.S. if we have to compete under those terms for that our wheat going to those regions. Argentina is beginning their planting season of winter wheat, and we think that if you're going to trade the wheat market, you still got to focus on the technical aspects of that market, and we've got good support in the July contract around 460 and resistance all the way up at the $5 area. So trade those ranges and trade it technically. You're probably better off than trying to follow any kind of fundamental news going on in the wheat. In the livestock trade, the cattle have traded heavily, a lot of volume in the country so far this week. Texas and Kansas look like they're going to be finishing out the week around the 97 to 97.5 area. The north in that 157 to 158 area is what bids and cattle have traded for early in the week, not so much here yesterday. The cutout values continue to creep lower. Cutout values yesterday in the choice was down 41. Select was up just slightly, but it looks like this cattle market and beef prices have topped seasonally. The purchase have been made for the Memorial Day featuring, official beginning of cookouts season. So it looks like the beef prices and cattle prices are have seen their highs here for a moment anyway, and I think you need to trade it accordingly. And as you've seen overnight, we've seen a lot of pressure in the cattle futures in the electronic trade, mainly because of investor confidence. They're looking over at the stock market, and you're seeing a lot of liquidation, and would expect more fund liquidation in the meat complex to keep pressure on there, especially when these outside markets are as nervous as they are at current time. In the hogs, continued pressure in pork cutout there is kind of leading the charge down here. Memorial Day promotions have pretty much been filled for hogs and pork, so that demand is over with. And with the stronger dollar, the anticipation of slowdown in export sales has all caused the pork traders to pull back their buying and put some pressure on that market. However, we did move right down to the 100-day moving average in the June contract. We still have tight supplies, but with outside emotion and influences causing some pressure there, we would look at a place to try to find a place to buy the June hogs. However, we think that the cash market should stabilize in here, and the tight supplies could support us at current levels. If you got any questions about the markets, don't hesitate to give us a call here and talk to our research department or any broker here at Allendale. You can reach us at 800-262-7538. We'd be happy to answer your questions. We wish everybody a very successful trading day. We'll talk to you tomorrow. Thank you.